Hello, everybody. It is Monday, October 26th, 2020. And after a couple of weeks of the stock market being jittery, we got to see the stock market a little bit upset today. Not hugely upset, but pretty upset. And this is something that I've been expecting to happen here as we close in on the election. I thought maybe the market would do it a few months earlier than it did. It started in September. On the Friday webinar, talked about the Federal Reserve and how they had ramped up money in the last 6 weeks or so. And really it ticked it up even a little bit in June, but really ticked it up again in September when the market started to correct. So the stock market's very tied to the Federal Reserve, which is very tied to the banks and the credit markets. And what I told you a little while ago was the Federal Reserve will care a lot less about the stock market if the bond market and the banks start to have problems. Well, it's starting. So the bond market is starting to realize that unsecured creditors are getting almost nothing in bankruptcies. So it used to be unsecured creditors would get 20, 30, 40, 50, 60 cents on the dollar, sometimes even more, and then shareholders would just be wiped out. Well, as it turns out, not only are shareholders getting wiped out in bankruptcies, but bondholders with unsecured debt are getting wiped out as well. So this is something that came across, and what I think we need to realize is that banks are getting hit with a return of property and assets that they don't really want. Very much like during the 2008-9 financial crisis. And just to give you some examples of what happens when the banks get stuck with assets they don't want, they generally dispose of them at very, very low returns. For example, I know a bar owner, good friend, I've known him since the late 90s. Actually, no, I take that back, since the late 80s. I've known this guy, and he owned 4 bars, sold them all in 2006 and 7, and he ended up taking 3 of them back from the bank because the next owner, I think in a couple cases a second owner after him, had gone bankrupt, and the banks foreclosed on the properties. One of the places was a big place, had indoor volleyball courts, a giant bar. It was probably a $2 million building at one point. They gave it to him for $150,000, and they loaned him money to bring it back up to code. So just consider that these banks are not getting a lot of money for the assets that are coming back to them. And what about the banks? BMO is one of them, and there's several in Texas. But what about the banks, and really all the big banks, that have loaned money to the oil companies? What will these banks get back from the oil companies? Oil fields that nobody else wants to buy? So remember, I've told you, if you think about you wanting to own a bank, buy Apple instead. I will stick with that. There is zero reason to own a bank stock today. Zero. And if you own a bank stock, you should sell it now before it goes down more. There isn't a single bank stock out there worth speculating on, not even JP Morgan. And they might be the best of the bunch of the big ones. Even the little banks around the country, unless you know their balance sheet and you know their business like really, really, really well, inside and out from a professional level, you don't want those either, because you don't know what they're loaned in. You don't know where they have liabilities that are to come back to them in the form of keys that don't open up any doors. So avoid the banks. I told you a month or two ago to sell those corporate bonds. Sell those corporate bonds, right? Sell all 3 of the corporate bond funds that we had been in for a little while. Sell LQD, sell HYG, sell ANGL. There's no money to be made in those anymore. And those coupons are likely to go down, not up. So be very, very careful, because this financial problem that we're having in this country because we haven't beaten COVID yet is about to come to a head. Over the next several months, you're going to see a wave of bankruptcies from oil companies to commercial real estate to companies that just can't make a go of it anymore. In Milwaukee here, we got notice from several restaurants that just said they're going to close over the winter and reevaluate in the spring. And I think that is travel and leisure probably is going to hit their bottom between now and January, maybe February. But, the companies that are going to go out are going to go out relatively soon. Same with oil. And the banks are going to take an awful lot of knocks for that. Now, will the Fed come and bail the banks out? Well, sure. Does that mean these banks are going to have all kinds of money to throw off in dividends and buybacks? No. And I think most of the banks are going to have to cut their dividends again. A lot of them have already been doing it over the last 6 months, 7 months, 8 months, whatever the case is now. And the buybacks that some corporations have yet, you're going to see a significant contraction in earnings here. And as you're watching the earnings reports come in, what you're seeing is that they're a little less committal about what things are going to look like. Companies have squeezed efficiencies out as best they can. If they fire any more people, what does that say about the amount of money that they can make on their business? So far, retail spending has held up the best, but that was largely due to the federal government's $1,200 checks and all the extra money from the unemployment benefits that I showed you the other day, that we have 22 million people still collecting some sort of unemployment benefit. So even though there's not an extra payment, you have, 14 million people collecting benefits that aren't your typical state unemployment benefits on top of the 8 million collecting from the states. So even though those are only $300 and $400 a week checks, it's still not zero, which is what small business owners and gig workers and freelancers would be getting otherwise. At the end of the year, a lot of that goes away if they don't pass a new bill. Given that we are 1 week away from the election, how many of you have confidence that there's going to be a agreement this week? Nancy Pelosi says they can still get it done by Thursday if the president comes around. But what incentive does the president have at this point? And to what extent do you think he can convince the Senate, the Republican Senate, to pass an aid bill in the $2 trillion range? I don't know. Maybe if they all feel desperate and they hope that they can get a last minute pop at the polls, I'm not really sure. So we'll see what happens. But right now, the markets, and I haven't even looked at the headlines on Bloomberg yet. Right now, the markets are not happy. Here you go. Pelosi and Mnuchin failed to reach a deal on stimulus on Monday's call. What's kind of amazing to me is that Pelosi's position has been very clear for a long time, right? The initial bill for $3.5 trillion, give or take, they dialed it back to $2.2 trillion. Pretty big jump, pretty big drop. I don't know why the administration sticks with the idea that they can keep pounding on, it's blue states are irresponsible. Look, blue states contribute more to the federal government than the red states. That's just a fact, and it's been going on a long time. So these arguments that they throw out there, I don't really understand the politics of it. But what I can tell you is that when the president is saying 1.7 trillion and the House of Representatives is saying 2.2 trillion, and they're largely in agreement on several of the big things, why they're fighting over these little itty bitty lines in the sand over a few $100 billion, I don't know. Which tells me that maybe both sides don't want a deal. I'm not sure why that would be, again, but it seems to be the case. So we take a look at the markets, and stocks were significantly down today. 650 points on the Dow. Doesn't even feel like a lot anymore, does it? Does it? After some of those 1,000 and 1,500 point down days in the spring, S&P 500 and the NASDAQ. Interestingly, the NASDAQ is starting to make me wonder if I'm going to get my price on QQQ. And we'll do the nifty shortcut because I don't have a trading system open right now. We've got QQQ down to 280. Oh, suddenly this is turning over in a way that if it breaks through here, it probably makes a straight line down to about 240 on QQQ. All of a sudden, things get interesting. At 240, you got to start saying, okay, when am I going to pull the trigger? Because somewhere between here and I think down here at the lowest, right, the 2018 bottom, somewhere between here and here, somewhere in this yellow box, you're going to want to buy QQQ. Now, I guess there's still that possibility that we are keying off 2016 and that we could go all the way down to about 120 on QQQ. There's your Armageddon scenario going all the way down there. I have a very hard time believing that will happen. In fact, I have a hard time believing we get below this orange line here anymore, just because all the money in play. But consider the Armageddon scenario. No fiscal stimulus, the Fed backs off, and we go 3 months in a vacuum with no power, right? November, December, January. What happens if President Trump loses and he just doesn't want to do anything anymore? Or the Republican Congress says, hey, we got our Supreme Court justice, which I think happens imminently. And there's nothing else for us to do. We're all retiring because 4, 5, 6, 7 of them are going to lose. We'll see. We'll see what happens. But right now, the market is starting to revert to mean. And that means a lot of our stocks could be interesting. So let's pull up our plug and play growth. I just want to show you the returns some of these stocks have had over the last 2 years. A lot of them have been winners, and they continue to be winners. Not a lot of negative divergences there. Only a couple of stocks on our whole list are turnaround plays. And Ulta's not really a turnaround play. They've, I think, just kind of become a slow growth play. Over the last 5 years, only a 33% return. But Ford and Delta are both down a third. Why don't we have a lot of turnaround plays? Does anybody know the saying? Turnarounds seldom turn. So you have to be very careful. You don't want a lot of turnaround plays on your list. You want a lot of stocks that have a history of doing well and beating the market significantly. And then only this bottom part of your portfolio should be companies that say, well, there's a lot of value there. And what we should know is that the value investing ideas that are out there are generally wrong. Right now, value stocks have been getting pummeled for years and years and years, and in fact are having their worst stretch ever, going back to the Civil War. Why is that? Grandpa stocks. There's a lot of stocks out there that people look at and say, well, it's going to make money again someday, and they have valuable assets, and it's a value. So I think it's a value, therefore I'm going to buy it. But really, I don't think that the value that people perceive is there in many cases. Companies that don't grow and have high debt are in trouble. And that is largely the value stocks. So it is one thing to call yourself a value investor. It's another thing to understand it. How many of you would call Warren Buffett a value investor? I wouldn't. He's a growth investor who actually employs the same barbell strategy that I've adopted, growth stocks that he can get cheap, and then certain commodity-linked and resource-linked investments that are essential, that have pricing power. If you take a look at his portfolio, it's all about pricing power. And a lot of things grow. Precision Castparts was a growth stock back in the day that he happened to get cheap. Coca-Cola, growth stock, he got it cheap. All the banks, when he bought them, got them cheap, and they grew. The airlines, when he bought them, were all in a trough, cheap, and then they grew. And he dumped them recently, just like he's been dumping bank stocks. Why would Buffett dump bank stocks and airline stocks? Because the world has changed. And the downside in the short run is a lot more than people think. So a few of you have asked me, well, do you really think we're ever going to get back to those prices we saw in March? My answer is this. It was freaking March. It wasn't that long ago. And this idea that we can't go back to prices from just 2 years ago, look, this is the unnatural rally. This is what was juiced by tax cuts and a Federal Reserve on steroids. This gradual growth over almost a decade, that was normal. Then they did the tax cuts and it turned up. Had a correction at the end of 2018. Oh my God, we had to do even more to juice the economy. Repo market, right? You got your rebound back to par. Repo market started to go haywire. We printed $1 trillion from here to here. That rally there represents $1 trillion from the Fed, because the derivative markets started to fall apart because somebody big, if not 2 or 3 somebody's big, who we'll never know who they are until the books come out in 5 or 10 years, started to go under. I think AQR was one of them. Maybe I'm wrong. And I think that there was a European bank or two. Deutsche Bank, maybe. Santander, maybe. Then we had the COVID crash. And in what universe, during a depression, does that make sense? Now, this sort of thing happened during the Great Depression too, to an extent. Then it came all the way back down in, I think, the 3rd or 4th year. I always forget which years or which. 33 was the next big crash. So yes, we can get into these zones very, very, very easily. So when we take a look at the returns, and we see that a lot of these stocks are still way up near their highs, the idea that they can't get down just to their 52-week lows, I have to be very careful not to say mean things. Because this idea that, oh, it's different this time, again, farmers' parlance, bullshit. So that's why we focus on these growth stocks and we just try to get them cheap because they're outperformers. And we only have, right, 1 turnaround, 2 turnarounds, 3 turnarounds, and I guess you could call Alta and Berkshire kind of your slower growers, right? But it's really only the bottom of this list that, I don't think anybody would look at Berkshire and say they're a turnaround. They've been sitting on half of their portfolio in cash for a year and raising more cash. Delta and Ford came on my radar in January because I'm telling you, their 4th industrial revolution technology is top of the world. These are 2 of the best technological companies on the planet. Ford proved it by within 2 weeks being able to manufacture ventilators and other equipment. Delta Airlines, they're pioneering all kinds of stuff. Their robotics is insane. So this is a company, if you've ever studied Delta Airlines, remember they bought a refinery 5, 6, 7 years ago. Their management doesn't look at Delta as just an airline. Both of these companies are going to end up being defense contractors and getting into other lines of business. And when air travel resumes, Delta's probably going to do the best because they're managing their hubs, I think, better than anybody else. And they don't have some of the problems that UAL and American Airlines have. And they have more scale than, say, your Southwest and other companies that struggle financially. Doesn't mean the stock can't go down back to its 52-week low, though. So when I was up pushing 40 here a little while ago, I said, let it get back to 20. And people said, well, it won't go back to 20. How's that going to happen? And now all of a sudden we see they're down to 30. Not a long trip down to 20-ish. Ford, been trying to tell you to buy since it was $5 a share, and now it's up to 8. And I'll tell you, it pulls back down here, that 6 and 7 range, buy it. Now, somebody talked to me today, has been giving me a couple of messages, trying to say, well, I need you to tell me when to buy. It's not how it works. By law, none of us can tell you when to buy, registered or unregistered. The unregistered guys, because nobody ever busts them on it, they try to tell you what to buy. I can tell you what I'm buying, what I'm studying, and what I think is a good idea if it fits your asset allocation and risk tolerance. That's what I'm allowed to do. You have to expend a little bit of effort to listen and follow what I'm saying. Don't just expect to get a buy email, which you get when I buy. I haven't bought much lately, but you need to read the material. If you can't put 4 or 5 hours a week into studying stocks, don't buy stocks. Stick with the ETFs. One of our subscribers had his daughter call me early in the year. She was 100% in growth, and I told her to put half of her money in cash in her retirement plan and her Roth IRA. And then when the time came, she had a fund, I believe, that was a lot like QQQ, a growth fund in her retirement plan. And then she bought a couple of ETFs. She's up like 30 some odd percent this year. If you can't spend on average, right, an hour a day studying your stocks, and I don't mean looking at charts, I mean, not unless you're ready to trade, but I mean going to the websites, reading the materials on the website, checking out their press releases, making sure that you're up to date on their investor presentations. And any company that you invest in, you have to read the most recent 10K and 10Q before you put a dollar in. Don't just do it because I say so, or because, well, Kirk read it, so it must be okay. No, you should understand where your money is. There's a study that came out that said people spend more time planning their next vacation per year than they do planning for their retirement. I'll tell you something. If you buy stocks and you add the sort of alpha that these kind of stocks add, you'll be able to take a lot more vacations. So if you want stocks, which is where you're looking to add alpha, spend the hour a day learning something about SunPower and NVIDIA. And then spend another day learning something about Zendesk and Alibaba. You have to put that hour a day in 5 days a week. Maybe you take some Fridays off, 4 or 5 days a week, an hour. Or if you want to just put an entire day on the weekend into it, you can do that too. I don't know that that's as effective. But in either case, you got to put those 4 or 5 hours a week in if you want to buy stocks. Otherwise, stick with ETFs. So of all these companies, we take a look at the plug and play. Where are we now? You say, okay, how many of these stocks are even at the top of the buy zones? And the answer is not many. They're not there yet, right? So we take a look at Amazon, right? Still has a ways to go, but it's off the top. I mean, it was almost 4,000, right? 3,600. So it's a 30% drop to get to the top of our buy zone. Do you really believe it can't drop 30%? Did right there. Did a whole bunch of times. And that's one of the best stocks out there. Take a look at Apple. Right? There's some pessimism on Apple. This is clearly a bearish pattern. So for it to get down to around $100 a share, I think is pretty likely. In fact, I think we're going to get a shot at our 85. And if the market really sells off, then 70-ish is quite the possibility. But I'd say right in here is probably where you got to get super aggressive. Unless the momentum indicators are pointing straight down. Does this look like something you want to buy? The answer is no. So you should know enough about MACD, right? We're only looking at 4 indicators, really. I look at more, but I point these out to you because they're very good shortcuts. Option Girl, are you on right now? Bonnie? No? Well, Teresa. Teresa, you use some of these indicators, correct? Does that look like something that would excite you? Peaked, turning down, crossover on the signal line, right? Okay, she says she mostly uses RSI. Apple was overbought on the weekly chart, and now it's coming down, right? That's how it always happens. The daily chart got a little rebound, probably will get down to here. Don't know if we'll get it in all the way over sold because there's money waiting to buy Apple. I mean, there are a handful of stocks that people are just dying to buy every time they get cheap. Apple's one of them. So in here is probably where that one gets bought. I mean, the odds of it getting all the way down here doesn't happen very often. But it did. It happened in 2018 twice. We don't know how big this sell-off is going to be. But in here is where you should get really interested. And that probably will correspond with a price, right in here somewhere. 85, 100 for sure. I'd be shocked if we don't see 100-ish. Will we see this? I don't know. But you see how this came down and it didn't fill that gap. And now it can't keep going to the next level. It's not making its new high. That's pretty bearish. And remember, what do we know about technical indicators? They are a hint about the underlying fundamentals because big money is moving around. And a lot of people know what they're doing. So use the technical indicators for what they're worth. And don't tell me they're hard to understand because, okay, if you're a fundamentalist, then tell me what's on the balance sheet of one of these companies and how it works. I think that's harder because they hide the accounting. These charts are your indication of what truly underlies these companies from a value perspective. When you take a look at these and you see these structural areas, right, from here to here is where the true value of Apple probably lies. I can say that by looking at a picture because it had a hard time fighting through this and it really didn't want to go below here. And it tested it, pow, got through. Just doesn't want to go below it again. So the true intrinsic value of Apple, if you were going to break it apart fundamentally, would probably, you know, and these numbers are always fudgeable, right? Because you can assign different multiples. It's going to be right in there. The technical chart is telling you roughly what Apple is worth. So when you get a chance to do something with hindsight vision, right? When you get a second chance, you use this to tell you where you're supposed to buy. The only thing that would make Apple go below here is just a complete catastrophe with the economy. My guess is that iPhone sales are not quite up to what they want them to be this Christmas, and you're going to get that opportunity down in here, and we're going to need to take it. This was 220 was what I told everybody what the bottom fishing was before, so that would be 55-ish. Could we get all the way back down here, right, to the March price? Whew, that would be a doozy. I doubt it. Stranger things have happened. So again, you go back here and you pick out any one of these stocks and you could do the same thing. Itron, I think, remember in the spring when I told you that the farmers were cheating on their crops by not fertilizing and that Nutrien was going to tighten up the supply, and so were the other handful of fertilizer producers. And now all of a sudden, Nutrien looks pretty good because now we're having to plan for next year. Same thing is going to happen with Itron that happened to Nutrien in the spring. Nutrien didn't get the orders they wanted in the spring because the farmers, because of the insurance, were going to get paid whether they fertilized or not. All they had to do is plant. Didn't matter if it grew. Now, Itron has kind of got a similar situation here. Cities and states can't afford to do things with Itron right now, even though they want to, because they don't have any money. Next year, at some point, they're going to get money. And Itron's going to get a boatload of orders, second quarter maybe. So you need to buy this correction, right? It got down to the top of my buy zone for 1 or 2 days, it was. And now I wish I had bought it. Will we get down to 64? Probably. Then will it make that run back down to here? Structurally, it looks like yes. I don't know that I would wait for it to go any lower. Again, it'll be a measure of relative strength index, just turning over. So it's got a ways to go. MACD, just turning over, got a ways to go. That's not even definitive. Money flow index just turned over, got a ways to go. So if it gets down to the middle 50s, I'm going to put in a starter position unless the downside momentum is huge and the oversold indicator is looking like it still has quite a ways to go. But relative strength index, money flow index, which is just volume weighted relative strength index, and money flow and MACD are real easy to use. And of course, Shaken is more eclectic, but when it's down here, it indicates negative or choppy, usually choppy. When it's up here, it's telling you, yeah, it's about spent, right? It's a different way of indicating something to think about that's a little different. It's not quite really an oversold signal. It's more of a blended momentum, oversold, overbought signal. It really just indicates, you know, what the recent rally was or recent decline was, you know, over the last 4 weeks, excuse me. And 4 weeks is important. The old turtle traders, some of the original trend traders in the 80s, they really believe that 1 month charts are pretty important. And that's why up here, I do have the 1 month. So you take a look at something here and you say, okay, home builders suddenly, right? Pulte suddenly in the last month hasn't done so well. But over the last couple of years, it's done really well, right? It doubled in a year, 2 years, 2 years. So if you get that pullback on Pulte down to in here, looking at the right stock, yeah, you get that down here to 20-ish. The wrong symbol. No, there it is. There it is. Right. Down into the 30s. See that structural area here? Probably have to consider buying right in there. But if it gets all the way down here, then you need to load up. Because I'm telling you, there is massive pent-up demand by the millennials to build houses. Massive. Lumber's a little expensive, although it's come down recently. So it's not as expensive as it was over the summer. And it's actually an indicator right now that bad things are happening. So we need to be very careful because really all the indicators are telling us the next 2 months could suck. And hopefully the market turns around in January, and then before it can feel that the world sucks again, there's a vaccine and a good stimulus package to jumpstart the economy. That's what I expect to happen. So I really do think that the next 2 months, unless we head to an Armageddon scenario, unless something that I don't expect happens, if Trump somehow wins, I think next year probably stabilizes and we have some opportunities to get into. But I wouldn't be trigger shy as we enter these buy zones. The Federal Reserve still has a lot of money, and if Powell wants to keep his job, he's going to spend it. But I think that he's going to take his foot off the pedal just a little bit for the next few weeks. And he's got to tend to the debt markets and the banks. The stock market just isn't going to be at the top of his list through the end of the year. Just won't be. What types of questions do folks have? What do you want to look at? There is huge demand for new homes. Huge. It's off the charts. We've been underbuilding for 12 years. And suddenly, just like the millennials started to have an impact on the stock market, they're starting to have an impact on the home market because they want a modern home. I heard that from somebody this weekend. I want a modern home. I was like, well, where you want to live, which is close to family. I said, there's an awful lot of 15, 16, 1,700 square foot brick ranches, and in the suburbs they were talking about, between $200,000 and $300,000. Well, for $100,000, you slap on another 1,500 square feet, have a pretty nifty looking building, and you're $500,000 in, but now you've got 3,000 plus square feet. You've got the giant garage. You've got, all the cool things you want, and it's all attached to a brick skeleton. So I don't know, whether it's brand new construction or huge additions, I think that the home builders are going to do very well. And probably it's the companies that we're looking at, Pulte, NVR, that do really well with the new homes. But I think that your regional and local guys, they're going to be doing these big additions. NVR is the one that I would look at. They're on the very short list. Again, with a very short list, it's a pretty big list. You don't really have to go outside of it. If you really, really know something about something, then fine. But the whole, just throw something from an article at us without doing any research, I get kind of tired of hearing those questions. So look at the very short list. They're all researched, and they're not all up to date, right? Sometimes we wait for the prices to get close and then we do the research again. You can't really keep up with 200 companies. Jim Cramer is lying to you to say that he can. You can keep up with about 50 companies. That's about it. And then when prices get close, in an industry, usually you brush up on the industry and your 2 or 3 favorites. Somebody asked about Facebook. I don't know why you'd be interested in Facebook. I know Dave likes them. I just tell you what, I think that they're going to have a world of trouble with with this new Congress, I think it's very likely that they're under 200 at some point. You know, their revenue model is changing, and as privacy takes center stage, and as Apple restricts them, which is what is happening, you need to understand what Apple is doing to them. They're not going to have this. This doesn't make sense for Facebook. And I'm the guy who told everybody to buy it off the IPO when it crashed. So when it crashed off its IPO, it got down to the low 20s, loaded up on it, and rode it all the way up to about 100. Haven't been very interested in it lately. The easy money's been made in Apple. Facebook. And Apple is, frankly, a big determinant on how much they make in the future. Apple is blocking their ability to take your data and then share it. So the fact that it didn't get through this fib level, right? It stopped right at a fib level, and now it's floating around in here. Would not take a lot for it to go boom, 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 boom. For sure down to 220 something, right? 220 something. I guess you could look at it. I don't like Zuckerberg, so I'm not real interested in investing in his company. You know who I'd invest in, though? Is if they force them to spin off Instagram, that would be pretty interesting to me. There we go. I was trying to do right there. Structurally, look at that. So would I buy Facebook under 200? Yeah, probably. Mainly so I could get a piece of the Instagram spinoff, because I think that's what's coming. I think the Instagram spinoff is going to be a condition on them, and because they're monopolizing online photography, and they're owning those pictures. Even though Google has an app for that now, and I've got pictures on 4 different platforms. I think that you're unlikely to see anybody catch Instagram and Facebook for pictures. So I do think Instagram gets spun off, and Facebook probably gets to own 5 or 10% of the company and have a board seat, and they'll still have the Facebook log-on contract for eternity, 20 years, 30 years, whatever, 50 years. But I wouldn't be real excited about Facebook. I really wouldn't. I think that anything above here is super dangerous, and it's not impossible, right? I was going to use a South Park word, impossible. It's not impossible that they get back down here to where they were in April, which is not too far from December 2018. So the bottom of this range is quite possible. What is the status of the dollar and Fed action? If the dollar starts to collapse, the Fed has to back off on printing money, right? So we'll see. That is, so there you go. The dollar, after firming, just doesn't look like it wants to go up, and it definitely has a level to go down. But as I have said over and over and over again, our flawed economy is better than everybody else's flawed economy. Ultimately, a currency is worth the productive assets that back it, and we kick everybody's butt on that. So the dollar is in a trading range. You really don't want it to go above here. You really don't want it to go below here. As long as it's in this area, you're okay. If it starts to break down through here, the Fed really is going to have to rely on fiscal policy. And that's why the Fed keeps saying, pass a stimulus bill. They're starting to push on a string. So up here, probably get the Fed prints a lot of money up here, which is what they did. And down here, they print less money. Outside of this range, high, it's too strong, and that's bad for the rest of the world. And down here, that just means that you're inching towards a financial crisis, which is what Bush did to us. Dollar just got so destroyed that with all the hot money, you had a financial crisis. So you can't create too much hot money by printing and printing and printing and destroying the dollar. I mean, we're close to that now. And here, getting down to here, I mean, now you're really flirting with danger. And I don't just mean stock market corrections. I mean the system collapsing. All right, is that it for today? All right. Keep an eye on the buy zones. They're getting there. A year ago, I was saying the same thing. People were telling me it's not going to happen, and then it happened. When it happens quickly. So prepare yourself emotionally to buy when your favorite stocks get into the buy zone, right? And you don't have to buy the turnarounds if you don't want them. If you just want to go with quality, go with quality. Buy Amazon and Alibaba and Berkshire, right? Alphabet. Start with those, NVIDIA. I'm going to take a look at PayPal again because I'd love to own it again. I bought it on the IPO, sold it down around 100. I just feel like the dumbest guy in the world for having done that. If they somehow get down to here, and honestly, I mean, this should really be up here. I just hate that idea. It's not cheap enough. There's a 618 line here. And can you really see PayPal getting under $100 again? I just think that would be amazing. That means things are really bad. But in the low 100s, there's a 0 line there, a 618 line there. Around low 100s, I think you got to buy PayPal. But it's 197, and you're can never go that low. It happens. What's to say that this wasn't wrong and this was right? All right, everybody have a good night. No World Series tonight, so I guess just read something. Study a company that you really like. Just a half an hour. Then study another one for a half an hour. All right, take care, everybody.